Hello, everybody, and welcome to At Financial Genie, where you are getting the straightforward and simple financial advice that you want in under 3 minutes. Today, we're still in our basic financial planning series, and we are talking about different types of investments. So, basic information. A stock. When you buy a stock, you are actually buying ownership in a company, and your goal is that the value of the company will rise over time. So, if you purchase a share of Apple stock, you own a portion of Apple. As the value of the company increases, at some point you hope to sell it at a gain, and that's how you're hoping to make money. Another simple investment is the bond. Now, the bond is different. When you buy a bond, you're actually serving as a lender. You're actually lending money to the company. They're going to pay you interest for letting them borrow that money. And then eventually in the future, there's this promise that they will pay your money back. Now, there's all sorts of different stocks and bonds, but generally speaking, the bond is considered a more conservative investment because there is the promise to actually pay your money back. Now, a third really simple way to invest money is in a CD or a certificate of deposit that you can actually find at a bank. Now, these aren't very popular right now because we've been in this really low interest rate environment. But believe you me, back in the 70s and 80s, CDs were paying lots of money. So a certificate of deposit, you would go to your bank and purchase. There's typically a limit. It's much like a bond in that you lend your money to the bank and they agree to pay it back. Typically a shorter term, very low interest rates today. The CD is what you would use if almost like an emergency savings, so to speak. I mean, it's definitely not necessarily a long-term investment. So at a very high level, those are your top three. Most of us today choose to invest in something called the mutual fund. We invest in the mutual fund, which is really just a collection of stocks and bonds because we're looking to spread our investment out. A mutual fund can hold thousands of stocks and bonds, and we all like the idea of diversification. So diversification is not having all of your eggs in one basket, not investing all of your money into just one company or one bond, but being able to spread that out. So those are the basic types of investments. All of your financial advice that you're looking for, short, straightforward, and in under 3 minutes.